traders, Gary Wagner here, approximately 11 a.m. on Tuesday, the 21st day of February 2012, making it 4 o'clock in New York City. And this is the daily report for gold and silver. We have substantially higher prices today across the board in the precious metals. Currently up about $25 in gold. As you can see, current print just teasing with 1760, currently 1759.08. As I said, up about $25 plus on the day. Silver, a nice showing, almost 80 cents higher, up about 78, up 34.35. 34.35. We are looking at daily charts of both gold and silver. Let's start with our gold chart this morning. Traders, what we are looking at currently, it is our daily gold chart. It does have our Elliott wave count. Now, on the daily, it's much more difficult to discern waves 1 and 2. You really need to take it down to a 720 or a 480-minute intraday chart, but this is approximately where they would go. And my sentiment has been, and we talked about this a little bit yesterday, but throughout last week, that we were forming a base above 1700. That is obviously clear that in fact has come true. And the second thing that we were looking at was the fact that this wave itself, this fourth minor wave right in here, as you can see, I believe terminated just a few days ago. 2 days to be exact. You can see the breakout right in here. In terms of where I think our next targets are going to be, we'll talk about that through the show, but I think that there can be no doubt at this point that we are in a subcount of a fifth wave right up in here currently, and that should propel us a little bit higher than we are currently seeing. Now, traders, I want to bring in a chart that we used a little while ago. This is a 480-minute chart, and of course, here you can see the wave count a lot better, but that's not my reason right now for bringing it in. If you recall, I believe that there was a distinct possibility that we would see this kind of a triangle breakout, as you can see right in here. Now, when we take a look at it, and look at the way that I drew it, I have not changed it at all. There can be no doubt that it broke really below that point. It broke out of that triangle. This is last week, of course. But you can see that there can be also no question that we did get a breakout. We got a lot of energy released. That energy was released today, and it was released in the form of higher crude oil prices and a lower dollar. The fact that there has been some sort of a resolution over in Greece has put pressure on the dollar, has prompted up the euro dollar, and in fact we saw our stock market today flirt with 1300. Whether it's closed there or not, we'll have to take a look. It was a little bit below last time I looked, but as you can see, we absolutely did get that breakout. Now, traders, we're looking at a 720-minute Henkin chart, Japanese average chart. This is the master Elliott wave count that we've been using, and as you can see, I'm going to, without a doubt, put my 4 here. And as I said, my current belief is that we have entered this fifth wave. And as you can see, I've gone ahead and added this. Now, we've talked about where I believe this fifth wave will probably take us to. My sentiment still remains the same because I am earmarking it on what we talked about yesterday, and that's taking a look at wave number 1 and then extending it to the beginning of the wave 5, which should take us right over here. And then, of course, extending that up, this is 100%, just below 1850. And then the 75%, or excuse me, 68%, is right around 1814. That's this line in here. And I believe that without a doubt, we have the opportunity or the ability to see the market move that high. Now, I've simply converted it back to a typical candlestick chart so you can see just how nice this move looks and the really acceleration, this breakout that we got today. When we take a look at it, what it appears to be is it is a pattern that Elliott wave called a flat bottom, descending top. And that's the best that I can make of this fourth wave right now. One of Elliott Wave's patterns is what's called a flat bottom and a descending top. And of course, it's quite self-explanatory. You get this base forming. In this case, it formed above 1700, as you can see. And then you get this descending top. Of course, the descending top is typically a scenario where you're getting a series of lower highs. You can see those right in here. You can also see that as this market came down, it did descend. And therefore, I feel it's a pretty valid call in terms of the pattern that we saw. The key, of course, is that we're in this market at a terrific area, because we got in this market roughly at 1580. So we got in not at the bottom, but pretty close to the bottom, somewhere right in this area. So we've been able to manage to accelerate and take a good portion of this market. Of course, we missed this part out here. We have weathered this storm here because we put our stops in an adequate place, protecting ourselves. And now my sentiment is we're off to the races, and I believe, as I said, that this market should take a stab to go above $1,800 per ounce. Traders, absolutely exceptional upside moves in the metals today. As I said, almost 80 cents higher in silver today. We have broke above $34. And if you recall from yesterday's report, we talked about, I believe it was 34.31 as being an area of some resistance. It happens to go with this top. I do absolutely believe right now, in terms of a strategy, 35.35 is a very obtainable point. For silver right now, that is a 61% retracement, and it is a retracement, what I'll call a large retracement. We've got two of them. We've got one retracement which goes from about 26 to our new record top, 49.85, right below 50. Of course, it is not as high as the Hunt Brothers, but that was decades ago. And then I've got a secondary, which takes us to the secondary top, of course, same bottom, but we're looking at the secondary top at around $44. So the ones on the outside, this is the longer of the two retracements. These ones on the inside, this is the more shallow of the two. And as you can see, we do have what we call Fibonacci harmonics. Our harmonics are the fact that we have two different time parameters, or two different sequences, I should say, 61% here, 50% here, and lo and behold, when we take a look, they are roughly at the same spot, 35 on one, 35, I believe 36 on the other. Virtually the same. I believe it's going to be an important resistance area. It also corresponds to this secondary top here. As the market, of course, came down, moved back up, this was the point that it found superlative resistance and the point at which it could make it no further. So my sentiment is that's going to be our first target area that we look for in silver. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.